Right, welcome to this video. In this video, I'm talking on the topic difference between market structure, support and resistance, and demand and supply. So basically, I'm going to illustrate or clearly differentiate because so many people mistake, or even I sometimes in my setup, I usually classify them as same thing. Right. Sometimes I decide to use supply and demand, sometimes support and resistance, but these two things are quite different from each other, right? They are not the same thing, and I'm going to explain in this video as we progress. So, in advanced price action trading, clarity comes from understanding how analytical elements connect, right? Many traders confuse market structure, support and resistance, and demand and supply, even though they serve distinct purpose, right? Knowing the differences allow you to read the market like a professional, right? So, understanding market structure, just as I illustrate, I'll show you guys in one of the topic situation like this. This is constant structure or price movement depending on the direction that price usually make. Great imbalance, feel it. So being able to detect this structure is going to help you know how to place your entry. Just as we know, this is entry point, this is entry point, this is entry point, this is entry point, depend on the direction that you're trading toward. So market structure is the skeleton of price movement. It defines the sequence of high and lows that reveal the market trend and behavior, right? So in this case, this is the market structure. Second impulse wave, then price came to this place, start a consolidation at this point before breaking out upward. Then the structure continues, right? What are we expecting next? Price will come here, then continue downward. That's the structure. So in the case of uptrend, when you see a scenario like I just illustrate, let me do on the both side, then on the upward side. So I have done and explained all the things in my previous courses. Check my catalog, you are going to see them. So this is, I'm going to still explain about checking out these market patterns is going to help you in full details if you study the course, just in case you're a new trader. You have to trace my previous course. So in the case of a downtrend, this is higher, this is sorry, in the case of a downtrend, this is lower high, right? Because price is going low. So this is lower high and this other swing is lower low continuously. Lower high, lower low. In the case of uptrend, this is higher low, higher price is going up, and this is the lower part of the swing. And this side is the higher high, right? Higher high, higher high, higher low continuously. In range equal high and low showing indecision like the distribution and accumulation phase. This is it. This typical range market. Basically, if you look at this closely, you see that candlestick forming inside this range zone does not really make sense at all. It lacks the momentum that neither buyer or sellers are actively in charge of the market at this point until you see a valid breakout of the ranging zone. Market structure provides the context, right? It tells you whether the market is trending, consolidating, or reversing. Without it, every other concept becomes unreliable. Those are the first thing for you to note once you open your chart. First thing is to analyze the structure. After analyzing the structure, you now start checking at key level, supply and demand, or resistance and support. So let's talk about understanding support and resistance. Support and resistance are reaction level within the structural zone where price has historically paused, reversed, or accelerated. So I'm going to go to the chart to illustrate these two things, mostly the relationship, the differences, then we come to relationship. So many traders confuse supply. Many traders confuse what is supply and demand with resistance and support. Majority thinks these things are the same, but they are not the same. Resistance support is not the same with supply and demand. Carefully, I will tell you the difference. So the difference between support and resistance, or resistance and support with supply and demand, is that support and resistance are basically price points based on historical trading behavior and trader psychology, while supply and demand are areas defined by significant buying and selling zone, or buying and selling momentum, right? So if our chart is like this, basically considering the time frame, then this is what we can see as long as this my screen is concerned. If you are using a wider screen, we are going to see more parts of the chart historically. But let's consider the screen of this laptop right now. Considering this is our resistance and this is our support. Overall, the difference, note the difference. Then within this is a supply zone, right? This is a supply zone. This is a demand. Where else? Demand, right? Demand zone, demand, price bounce. So basically, this is how to know the difference. So I'm going to change all the supply zone to different color, and this a demand zone. So that is basically the difference. So these two things are not the same. If I compress this chart more, right, you see that the attention has shifted from this place. This is basically our support zone now, because I brought in more historical parts of the chart, what has happened in the past, to combine to contain with the screen, the PC screen. So based on that, this place has turned to our demand zone. Also, this is also demand zone. This is a supply zone. So basically, this is the difference. So you don't have to confuse these two scenario again or classify them as one thing. It is not the same. So that is the difference and how to spot this thing. I've read the definition clearly to you guys. So the next thing we're going to talk is the relationship between those concepts. That is market structure, the relationship between market structure, resistance and support, supply and demand. One, market structure gives the direction, just as illustrated. If you open this chart right now, the first thing to do is the structure. How has the price moved over time? What is the reaction? This is a range market. The price break, let it pull back, continue. That is the structure. It gives you the direction. So in this case, I can apply a trend line to show that this is an uptrend. Support and resistance are like crowd-based reaction points. Crowd-based. This is support. This is resistance and this is support. Crowd-based reaction points. Whenever price comes into this point, it tends to react and return back. The same thing applicable to the resistance zone. So that's basically the relationship. Demand and supply reveal the true source of price movement, right? Excuse me. What has caused the price movement over time? There was a demand at this point, right? There was a demand for this pay at this point. There was a supply of it at this point. There was a supply at this point. Excuse me. There was a demand at this point, right? So together, these three concepts form a complete picture of the market. Example, in an uptrend structure, traders look for buy opportunities at a demand zone, right? Demand, buy opportunity, supply, you're looking for sell opportunity. Institutional, okay, or support areas, reaction level. Key mistake for you to avoid by looking at to apply this to your daily trading. Ignoring structure when trading support and resistance. You can ignore market analysis or the price swing when trading support and resistance. Confusing demand supply with simple reaction zone. Sometimes, example, this case, you can classify demand and supply to be involved at this point. This is a clear market reaction or a consolidating zone. So there's nothing like a supply or demand at this point for this currency. Trading every bounce blindly without considering institutional flow. So it's not all the bounce that you're going to trade, right? Example is this case. If you jump into the market here, there's no presence of institution at this point, so there's no volume. There's no volume, not enough liquidity to push price at this point because institutional presence wasn't there until they come into the market. So as soon as they come into the market, you can see the next line of action, what happened with this currency play. Look at the buy that took place, right? So in summary, market structure, divine trend, and context, support and resistance show emotional reaction of retail traders basically, because retail traders will always sell at the resistance zone and buy in a support zone. That is why market makers know how to handle loss. Market makers, institutions know how to manipulate us, work, control, our emotions because they know all our action. Demand and supply expose institutional footprints and true order flow. So that is what is going to give you an edge, right? Demand and supply, not really support and resistance. Because if you open this chart right now, support and resistance is just the grab points, the highest level that the price has tested within the size of this our screen is the resistance, and the lowest is the support. So looking at that, you identify it. What are you looking for? Are you waiting for price to move over to this place again? No. The basic thing that will give you daily trading opportunity is the demand and supply, which happen within, in between the context of support and resistance. So combining them is going to enhance the accuracy of your trade and ensure your analysis align with professional trading logic, right? So knowing how to align all these things is going to help you move along with institutions, right? Institutions that control the market. So that is basically all in this course, and I'm sure I've been able to break down some of these things to our understanding. Knowing this, applying this is going to help improve your trading ability and also give you the knowledge that you require to align with institution or note when they're coming into the market to execute their order so you can move along with them. So that takes us to the end of this topic. See you in the next video. Thank you.